So now we're gonna go to something that we haven't done in a long time, but was always a Market Monday's favorite. I think
Yes.
Ian, you put together a presentation, right?
Yes, it's time to bring it back one time,
All right, let's do it.
I am the Michael Schumacher of the Rock roster. Let's see if I remember how to do this. Microphone check 1, 2, 3, 4, 5, 6. I'm happy to be here tonight. I love y'all. I haven't done one of these in a while, and I think that it's overdue. With all the hysteria around GameStop and AMC and other companies that are pieces of bundled dinosaur Mesozoic era bullshit, I think it's really important tonight to break down how to evaluate a company to determine if it's a 5-star investment or if we should leave it alone. So this is like my personal checklist, and then I'll go through what a great company looks like. So on the fundamental side, I want you to look at what is the year-over-year revenue. So this is really simple. This is one of my favorite sites here to look at. So if you look right here, you can see revenue for this company, GameStop, despite the hype, is down 15%. Okay. Secondly, I like to look at what quarter-over-quarter revenue is like. So one of the most important lessons in investing is to take your emotions out of it. Like one of the phrases my grandmother used to tell me and my mom and my brother is put your emotions in your pocket. And as an investor, you have to do that because you can have positive sentiment around something that's a piece of shit. Like other companies, I won't say this one is, but has not fared well, right? So if you look at what the revenue is, quarter over quarter is down 28.72%. Not a good sign. Then this is probably most important, and I should have maybe have led here, but if we look at what the profit margin is, 0.13%. And I think Roaring Kitty is an amazing marketer. But I don't care what he says. I don't want to invest in a company that gives me 0.13% profit margin as an investable asset. I really don't. And then after that, what am I looking at? Operating margin. Okay, great. Well, in this case, it's not great. Operating margin. So before I get to gross margin, which is important, and if you go to the site, it's wallmine.com, you can see all of these are in red. And if in comparison, I look at a company, let's say like one of my babies that I called Nvidia, let's look at that real quick. You can see that the metrics are in green. Profit margin is 48%. Gross margin is 72%. Operating margin is 59%. Quarter over quarter revenue up 262%. Year-over-year revenue is up 208%. So it gives you a quick snapshot to see if a company is good or bad. So when we go back to GameStop, we can see bloody across the board. I don't like to see this much red. Shout to YG and all the Pyrus, but I don't want to see this much red on the board when I'm looking to invest in a company. Then if I go to number 5, return on assets. What is the return I'm getting percentage-wise? Great. Well, once again, not great. 0.89%. If I look at in comparison to a company like Stryker, please put it in chat. I will base my investment decision off of the numbers and not emotion. So return on asset, 8.69% on Stryker. Not that good for GameStop. And I'm not here to pick on GameStop. Shout out to all the GameStop gangsters and all that, whatever, if you are in Roaring Kitty's clan, if you will. But it's not favorable. Sentiment does not change reality. And I think in this era of social media, we have to realize sentiment does not change reality. The numbers are what the numbers are. And then percentage of shortage float is number 6. Cool. Short ratio, number 7. You have to factor that in to see how many people are looking to short the stock. If we look at in comparison to Nvidia, only 1.37% of people are looking to short Nvidia. Let's look at my baby Apple. Has not done as well this year, but is up to the upside. 0.68% of float on the short side. But if we go back to GameStop, we're looking at 20%. Not the best percentage or ratio that I like. And then also too, on a business side, it's not here on this board, but write this down. Number 7, what is the unbreakable competitive advantage that the company has that no one else in the world has? When you look at Nvidia creates chips that most people cannot manufacture at scale that perform the function that they can. It's kind of easy to sell discs and toys of Pikachu in a retail front. There's virtually no moat for that if you have more than $20,000, right? So what you have is an idea, you have a movement, but you don't have a solid business model to back up what you are looking to invest in, okay? So if you look at Nvidia, just for reference, and you look at the site, you can start to see, and a homework assignment, any live events like this one, you should probably check out. But go look at their blog, the reports, and see what they're looking to create to see what makes them different. If you've been a gaming fan or a fan of the products for a long time, you already understand. But I think we cannot ignore one of my most important indicators on the fundamental side is what can you do that nobody else on earth can do? For me, in investing and trading is to be able to call prices of where to invest that would give me the best return, right? So when I say Nvidia 107, 77, or the Nvidia 112, there is a reason for that. But when you look at this GeForce, RTX, which I do have in my computer, it's a hell of a performance piece of technology and marker that outweighs and beats their competition. And no one can really argue about that. So after that, of course, one of my other favorite ways to look at the market is, where does their brand rank? A lot of bad investment decisions will be avoided if you just stop picking the number 7 best company in that sector. Are they number 1 or number 2? I think we can say clearly and definitively that Nvidia is number 1 in this space. Number 9, what is their percentage of market share? Number 10, which business are they number 1 in, or at least in the top 3? And once you go through this checklist, year-over-year revenue, quarter-over-quarter revenue, profit margin, operating margin, return on assets, unbreakable competitive advantage, short percentage of float, it eliminates a lot of the companies that are not of quality. My question for you is, will you use this investing checklist to weed out the companies that are great and the ones that are horrible, even if you see someone on Twitter or Spaces or Instagram tell you that a company is good for the long term when the fundamentals don't match at all? I mean, because if we're going to be very honest, this game isn't that hard. I get some of the fear in the beginning, but this is why I tell you guys, you deserve to be rich. You deserve to be free. But this is a simple blueprint for you to be able to follow on if you should invest in a company. Great. Number 11, did they have a superior customer experience if they are B2C, which means they sell into a end consumer or enterprise wise? Also in that consumer experience, like, does the product deliver on what they said that they're going to do or better? So when I'm talking to some of you and you're like, hey, I'm up 300%, 600% long-term only, I'm up 300,000. Shout to the gentleman that's, paid off a cattle ranch that I met this past weekend. That experience matters. And I'll say this, stop letting people confuse you just because they have access to talk to you, trick you out of your spot, and you confusing that for the real reason we're here to, and that's to get freedom. And to have freedom and be able to spend more time with our friends and our family. Number 12, is the product or service superior? Yes or no? Some things are very easy in investing. Is this thing better than its competitor? Is Nvidia's chips better than AMD, even though Lisa and Jensen are cousins? Yes, Nvidia's superior. Pricing model matters. So they're able to charge $40,000 for those chips at a time when that almost seems like a discount. And if they move the price up to $100,000, not many people that they're selling to would scoff at the price. And number 15, I have to reiterate, what's the one thing that you can do or that brand can do that nobody else in the world can do? They're able to make a superior chip, get it out faster, have a better executive management team. And I keep saying that Jensen is walking into a Steve Jobs-esque or like moment in time. Other people that make chips, TSM, great company. Management team isn't as good. They got a big ass geopolitical threat that we'll talk about tonight that makes everyone afraid to invest in them as a primary asset. You don't think that has an impact on the stock? It definitely does. If they drop a fucking bomb on Taiwan or it starts to invade, it will send the entire sector plummeting. But when you're evaluating a company, before you get into the emotional aspects in any decision that you make, you need a checklist or some kind of framework like this to decide, is this person, thing, entity, investment good for me? And if that year over year revenue look like GameStop's or AMC's, you can't touch it just because a dude put on 2 fucking band-aids and he pretended like he's a retail trader while having licenses, while having worked at a firm, and while I'm not mad at him for getting a bag, but we're not going to pretend like he's purely retail. This is for those of you who still, or maybe you're new to the show and you're asked, hey, where do I get into the market? Very easy. 200-day moving average. This is a great place to get in or potentially load the boat. Number 1. Number 2, 72-day moving average, and this works for trading as well, right? Number 3, yearly open, maybe next week on next week's call for Stock Club. For those of you who join, I'll go over the yearly open and how to use that. And number 4, watch the show or join Stock Club, and I can tell you exactly where to get in. Stop confusing killing time with trying to come up with your own assessment versus being given a price that's superior. Because some of you are coming to me and say, hey, this analyst said that Nvidia could get to 300. What do you think? And I'm like, well, I gave the price 2 years ago. What we're going to split to and what we should get in and get out. Those analysts not fucking with me. Humbly and graciously, right? But 200-day moving average, 72-day moving average. If you really want to get fancy, you can throw in a 400-day moving average and then use the prices here to be able to know where to get into the market. I've gone over this before, but I want to reiterate. If you don't know where to get out, either after 5 years, after 100% return, a 500% return, or hold for 30 years. The rules of building wealth are really, really simple. I don't think that you need to have a whole bunch of exits. Your exits have to either be time-based. So I want you to write in chat, are you going to have a time-based exit or percentage-based exit? I'll tell you the people that have held for a longer period of time have gotten richer, for sure. So if you get to a place where you have a 500% return, may not be a bad time to get out, but I like the investors that are holding for a 30-year period. Some of the people, if you held the right company, trading and investing has considerable risk. Let's get the disclaimer. I got you. But some people, if you got in Monster, what is your return for a 30-year period, or your 30-year return for Amazon or Microsoft or any of these legacy companies? You have to be mindful. Economic moats that are really key on a fundamental side. Low cost of production. We talked about it even here. Some people may criticize it, but even in creating media, the media can't cost a lot. Low cost, sell it for a high price. Great. Number 2, high switching costs. So if I have an Nvidia chip, if I have to take it in to get it removed, to get an AMD chip, a Ryzen chip, or something from IBM, is going to cost me a lot. Number 3, network effects. If I get off Instagram or I get off the Apple ecosystem and I'm not able to use iMessage freely across all platforms and laptops and iPads. Hey, fellas, don't you hate it when you be on a date and then all of a sudden a memory from 2 years ago from somebody that you're not even dating, but you thought you deleted? Yeah, see, the network effects has a bad side to it. But the great side is you can tie an iMessage together from your phone and have all your data in one place. And also too, we'll talk about it one day, but at some point you guys need to back up that storage because the hard drives will corrupt and go bad, and all of your pictures from your child's 3rd grade basketball game are going to be deleted. Number 5, what is the value of the brand? I want to keep making a case, Nvidia versus GameStop. GameStop is not valuable outside of the crowd who has affinity for it because of Roaring Kitty or because they made a lot of money out of it. Number 6, what is brand loyalty? Even though Apple has not done the best this year in comparison to Nvidia and others, the brand loyalty is the one thing I think that is keeping them pushing along when they would have underperformed if they were a traditional tech company. Number 7, do you have a higher retention rate? And number 8, we'll talk about it tonight in the oil and gas space, but do you have a legal monopoly? You want to be in a space where you can have a legal monopoly, not have that much regulation or lobby your way out of it. And I've talked about this before. What are the 3 most important indicators? But I want to add one to it because all of a sudden during this cycle, for some reason, they changed the terms of what a recession is. But number 1, quantitative easing. Number 2, the inverted yield curve. I guess they threw that out the window up until maybe after election. Number 3, 20 years in the market. And then number 4, one thing that I've been checking religiously is the M2 money supply. How much money is being printed and then circulated out into the economy? And when it is circulated, who is receiving that money that is printed? Some businesses did incredibly well in 2020 because money was floating around freely. And in 2024, some of the same businesses are not doing as well because M2 money supply has dried up amongst their consumer base or the enterprises that they were targeting for business. It does make a hell of a difference. So these are 3 most important indicators that I look at, but M2 money supply, since they changed the game, does matter a lot. And one of my favorite episodes that we ever did was the episode with Mark Cuban. I have to reiterate this rule. I know it's not sexy. I know every time I mention this, it gets vilified on Instagram and TikTok, but Mark Cuban has more money than I. And his rule has always been, IU legend, read 6 hours a day. You can see this. If you were reading Ray Kurzweil's prediction on futurism 8 years ago, you can see the foundation that was laid for AI, which Nvidia was able to take advantage of because of the geopolitical threat that is posed by TSM. TSM is supposed to be number 1. Nvidia is supposed to be number 3. AMD was supposed to be number 2. And AMD dropped the ball. And then TSM has a geopolitical issue. But you don't know that if you're not reading and looking into the market every single day and spending hours looking at Wall Street Journal and IBD and going through CNBC. Physical paper is better because sometimes online, some of the key information is not there or is redacted later. So hard copies and then also going through a certain amount of pages per day will make a huge difference. In my personal research blueprint, I'm marking off the buy zones for the top 500 companies that I'm interested in. So that's why if I say a company is going to drop incredibly low, I've already done the research on the company before it came in fashion. Right? Don't you find it interesting that despite all the fervor and fanfare around GameStop this time around, and Ron Kitty had 700 trillion people on one live stream, that it didn't move the stock? But if you put Fibonacci retracements on its all-time high and the low, it's just retracing back to the level that it should go to based on the buying cycles of what happens in GameStop and that sector. And then for me, I'm also reviewing the top 36 futures 7 days a week. And I think it's really important to read every book that you can on investing, everything from Sequoia Capital, everything that comes out of Y Combinator, so you can see the pipeline of where that money is circulating, where they'll have interest, and where that money will flow to. So when it becomes publicly traded, will be good. Like for Sam Altman to be involved in OpenAI and see the best creatives and best pitches and best companies for the last 10 years, do you think it's by happenstance after seeing all that data, all those pitches, what got funding, what got turned down, that when he decided to launch his own thing, that he had a blueprint or a framework to make his company number 1? That's not by fucking accident. Put it in chat. More research, less rhetoric. And speaking of sites in which you can do your research, and we shall end here, But I've missed doing these. Maybe I'm gonna get back. I'm not getting back in a suit bag every week, but I may get back in my presentation bag once a month. But if you join Stock Club, you will have this level of information delivered to you every week. Sites to do your research: Guru Focus. Number 2, Macro Trends. Number 3, Y Charts. Number 4, Portfolio Visualizer. For those of you who cannot afford Y Charts, Seeking Alpha and Koifin as a combination are really great. Number 7, Zacks. And number 8, Wall Street Zen. Are the 8 sites that I really like to do my research. But when you're going to the fundamentals, go over year-over-year revenue, quarter-over-quarter revenue, then profit margin. If the profit margin is in shambles, I don't care about who's an ambassador for it. Like, we have to look at the fundamentals and then make a decision. Is this a business that I will put my life on the line for or no? I mean, let's look at this real quick. Like, I don't mean I love Lisa. Think she's amazing. Shout out to the executive management at AMD, yada, yada, right? Profit margin is 3.77%. Okay. If you compare it to her cousin's business at Nvidia, 48%. Holy shit, hell of a difference, right? Let's go to Eli Lilly real quick. %15 profit margin for that space. That is not bad. Let's go to Nvidia and just look at profit margin. Cool. Let's go to AMC. Negative 8.24 profit margin. I don't give a damn if they give you Bitcoin with every purchase of every time you go see Planet of the Apes or the Watchers of Bad Boys 4, ride or die, go see it. It's not an ad, but even if I got one Bitcoin, I still couldn't invest in the business because of the profit margin is negative 8%. Like, it's too much red, right? I'm good. You have to look at the fundamentals of the business first before you can get your emotions tied into it. And if you do that, you will make a hell of a lot of money in this market. I appreciate y'all. I know it's been a minute since I've done one of these. If you want me to do more, please put yes in chat. And maybe I'll break one out monthly. But if you join Stock Club, you get this level of information on every call that we have. And also, you know what's happening in the future. Probably 3 or 4 months, and in some cases 2 years before everyone else does. Let's look at Pepsi real quick. Bum, bum, bum. 9% profit margin. Not bad, but it's nothing to brag about. But for their business that they're in, and also too, you got to factor in what the margins are for the sector to see if it's good or bad. But the thing that I do love about using the site, if it's green is up, red is down. It does give you an insight on if that business is good or not. And from there, you'll be okay. And let's go look at my baby real quick. Microsoft, 34% profit margin, gross margin 68%. $1.8 trillion company. Enterprise value is $3.1 trillion. EBITDA is $125 billion. Revenue quarter over quarter is 17%. Not bad for $1 trillion company. Year over year revenue is 13%. Pretty damn good. Return on assets, 19%. Return on equity, 37.5%. Not bad for a multi-trillion-dollar company that just in the last 5 years became fashionable and popular amongst their consumer base. Not bad. We have to lead with logic and not emotions when we make these investment decisions. And always ask yourself, if this was my last dollar and my life and my child's life was on the line, would I invest in this company? That'll fix a lot of your problems.